Okay, so in this video, we're looking to accomplish two things. One, we're going to talk about what candlesticks are, and then two, by the end of this video, you should be able to go into the next video knowing a little bit about what or how to read a particular chart on tradingview.com. Now, I'm not saying that you're going to be a guru at reading these charts. Of course, it's going to take time, but you should at least have a little bit of an understanding. Now, only Einsteins will get this perfectly in the first try. Let's see if you're an Einstein, but if you're not, you're perfectly fine. I didn't get this until 2 months after I had first learned what candlesticks are. But I promise you, follow this course, and it'll take you about a week or two, or even less, to really understand what they are. But they're not that confusing. So we're going to go over 6 of them. Essentially, what a candlestick is a way to interpret the price fluctuation or an exchange rate fluctuation within a certain time frame. So you can see how the price has changed over a minute, or over 5 minutes, over an hour, over 4 hours, over a month or a week, a day. This is dependent on what you set the time frame of the candlesticks to be on TradingView.com on a particular chart. So without further being said, we're going to go ahead straight into learning what candlesticks are. So we have the first example here. This is the most basic candlestick, plain as can be. Now, there are 4 different parts of this candlestick, okay? This is going to take you time to understand, but I'm just going to pinpoint them so that you can write this down in your notes and then you can go over it later or look at this on the chart. So, this point right here is the first point, okay? Number 1 stands for, this is the price at which it opened at, right? So let's say this is an hour chart. Let's say this is each candlestick covers about 1 hour, right? Let's say it covers about 1 hour at the top. That's really ugly, actually. That's super ugly. Let me put 1 hour chart, right? 1 hour. So this point right here, at this point right here, that is where the price has opened for the hour. So let's say it's 1.5 here, right? Okay. Now, this point is where, this point right here, number 2, okay, is where it closed. So let's say this is 1.6. And when I say close, this is where it finished off. This is it at the end of 1 hour, the price stopped fluctuating at 1.6, right? At which a new candlestick will be made to show the next hour. So let's say this is 2 a.m., right? The price has been fluctuating. It opened at 1.5. It closed at 1. It opened at 1.5 at 1 a.m. And at 2 a.m. it closed at 1.6. That's what it stopped. And then it opened at 1.6 at 2 a.m. because it's starting a new hour and a new candlestick will form. But let's just start the basics. So at the beginning at 1 a.m. it was 1.5. It closed at 1.6 at 2 a.m. Now this point right here is the low point for the hour. So let's say this is 1.4. Let's call this 0.3. 0.3, this ends at 1.4. So this is the low point. This is the lowest point that it hit for that hour. It was still fluctuating. Let's say this hit it at 1:30 a.m. It's still within that hour time frame, but the lowest point it hit was 1.4. And this is the high point for the hour. So this is, let's say this is 1.7, right? Let's call this 0.4. So at let's say at 1:45 a.m. before 2 a.m. this hit 1.7 and then it went back down to 1.6. So like I said before, this candlestick is indicating how the price has fluctuated within the hour, right? Or whatever time frame you may set it at. We can now move on to another example of a candlestick. Okay, so this is another candlestick. Let's say, again, this candlestick is a 1 hour chart starting at 1 a.m. and ending at 2 a.m. All right, it went from 1 a.m. to 2 a.m. So at 1 a.m., again, this is the open price, number 1. This is the open price. It opened at 1.5, okay? Now, again, just like before, we now no longer have the high point at the top. The high point and the close point have become the same. So this can be considered the close and the high. It went up to the highest point and closed at that high point at 2 a.m. at 1.6. or since for the sake of last time, let's just say this is 1.7, right? It has now increased from where 1.6 was, where it closed last time. Let's say it now is 1.7. And the low was still 1.4. This was still the low. That's another example of a candlestick. Okay, so this is a case that's vice versa. This is actually where we have removed the low, or we have removed that separate low line, and the opening price and the low are now the same. So essentially that means that at the beginning at 1 a.m., it opened at a certain point at 1.4, let's say, for example, and it never went lower than that within the hour. It just increased. And it closed, let's say the close was 1.6, but then within that hour, it was fluctuating and it hit 1.7 eventually, but it went down and closed at 1.6. All right, so that's the third candlestick. Okay, so now we have a candlestick that is essentially filled in. What does this filled in candlestick means? Well, if you can take a wild guess, for you Einsteins out there, this candlestick, instead of it having increased, so starting at a lower price like 1.5 here and ending at a 1.6, the open and the close are actually reversed. So, for example, number one, it actually opened at 1.6, right? The open point was at 1.6, and within that hour, it ended up closing at 1.5, right? However, for you smart cookies out there, the high point still remains the same. So the high was 1.7 and the low was 1.4. Okay? So you guys can pause the video, rewatch it again, and see if that makes sense for you. Although I recommend, if all this is not making sense, there are a lot more better videos out there on YouTube that will explain to you exactly what candlesticks are. This is just a background for you guys to kind of understand the backgrounds of what we're doing here. Okay, so now we have another candlestick, kind of like what we were doing in previous exercises when it wasn't filled in. All right, I'm just going to fill this in for you guys so that it makes sense. And then if it doesn't make sense, you can go and watch other videos as to how it can make more sense for you maybe. But I'm going to explain it to you now. So this, again, is the opening price. But as you can see, the high point has now disappeared. It means that the opening price and the high point are one and the same. It actually opened at the highest point. It never went higher than this, let's say this is 1.7. It never went higher than 1.7. Actually, within the hour, and it ended up decreasing all the way to this low of, let's say, 1.4, and then closed at 1.5. Okay? That's what this candlestick means. All right, and now our last candlestick, just want to explain this real quick. We now have, kind of like in previous exercises, I'm going to briefly go about this. Again, like I said, this is a candlestick that is decreasing throughout the hour. So it actually opened at let's say 1.6, right? It went up, okay? It went up to 1.7. That's the high. And then it ended up closing, so I put 2 up here. It ended up closing, and the low was one and the same at 1.5. So it never went lower than 1.5, and it ended up closing at that 1.5. So these are essentially what candlesticks are. As you go into the graph and as you trade more and more, it'll make more sense when you see real time how these candlesticks fluctuate, and it'll kind of stick into your heads. But this is a basic overlay of what, or overview of what candlesticks are, and I would definitely recommend going out there and reviewing more and more on what candlesticks and how to interpret them, what they are, how to interpret them. There's so many good YouTube videos out there that'll help you with that.